Welcome to Markets Now. I'm Michelle Rook along with Matt Bennet with agmarket.net. And after kind of a mixed start this morning, we're seeing pretty much everything to the plus side in the grain sector. Livestock have continued their strength as well. And Matt, after all the risk off that we've had here the last couple of weeks, are we just seeing a little bit of a risk on kind of an environment driving this rebound that we've seen in everything today?
Yeah, I mean, here's the thing. We were called to come in here on Sunday night actually to be higher, and the markets were, to be honest, a little bit disappointing. Really not much
Right.
going on. Overnight wasn't all that great. Saw some losses there, and then you see a little bit of this bull spread unwinding where your front month isn't performing near as good versus your futures months, your deferreds, if you will, which is an interesting feature. And I think what's going on here, a lot of folks have made a ton of money spreading both corn and beans, and I've got to think that, especially in the case of corn, there's some profit being taken there. With that being said, we're actually up. And why are we up? I think that several folks over the last 4 weeks, if you will, took a few short positions here and there. And quite frankly, I think that you're seeing people maybe a little bit cautious as to go into this report with a bearish tone, because there's a lot of implications coming up on Friday.
Yeah. And you and I have talked about so much about how this has been about money flow and fund positions and whatnot. So we've got the funds basically short in the corn market. And so we've taken some pressure off of there for sure, but we're also down at a price where we've stimulated some demand there, as we saw with some more export business this morning, right?
No, absolutely. And I think whenever it gets right down to it, the funds come in here, they're selling corn, they got tired of the story. They're thinking, what is it that's going to drive the market up? Because people look at the funds and they think, oh man, I don't know why they're selling. Well, they're selling because they don't feel like their investment's going to pay off. So we've been static just forever, just sat there and did nothing. Then the market, bottom falls out of the market. Export sales and shipments were pathetic. And then over the last couple of weeks, obviously, we've shored up this export business a little bit. China comes in 8 out of 10 days over the course of 2 weeks with some sort of a purchase, over 100 million bushels that they've bought at this point. Unknown came in this morning and bought, probably China. You don't know for sure, but
Right.
bottom line is, I think some of these funds said, "Now hold on a second. Actually, maybe we need to be rethinking this," because there's no doubt that if, for instance, we do have planting delays here in the U.S., if the safrinha crop isn't a big crop, given what's happened in Argentina, you're looking at a world corn situation that isn't growing by any means. So production worldwide, year on year, down to almost 70 million tons. That's a huge drop in production.
So the bear spreading in the corn, you think, is just more profit taking, not necessarily that business is dried up or anything?
I think it's spread unwinding. I mean, that's
Yeah.
exactly what I think is going
Right.
on.
So are the funds done liquidating in the soybean complex? Because they were still long on commitment of traders reporting both soybeans and meal.
I do think that selling is going to dry up for the time being. Now, obviously, Friday can change a lot of things, but whenever you take, for instance, no beans down 13 straight sessions, you take no, all the way through the complex down well over $1 over the course of less than 3 weeks, and certainly a large scale move. And so, bottom line for me is that I think we've done enough damage for the time being, especially whenever you look at this world situation. Yes, Brazil's got a big crop. We all know that. But Argentine production, I mean, it's likely looking like it's going to be half of what we originally projected, which was around 51 million tons. If they end up at 25 or 26, all of the shortfall there is going to have to come out of Brazil as far as imports go, because Argentina does not want to lose their spot as the #1 soybean meal exporter in the world. So if they take all those beans off of Brazil, those beans aren't going somewhere else. So the balance sheet continues to change. I can't get super bearish in that particular situation.
Funds are short in all three of the wheat classes. We're seeing some short covering today, but is some of this maybe a little geopolitical with Putin talking about maybe nuclear weapons, or what is it?
I do think so. I mean, the thing is, Michelle, is that this wheat market seems like it can get kind of pushed and shoved around a little bit with some of the news that gets released. And a lot of the news that's pushed the market around over the last 12 to 18 months has certainly come out of that part of the world. So, my personal opinion on wheat is that we're oversold. You look at the chart and it actually looks like it's trying to kind of build a little bit of a case for, we're going to have support under us finally. And so with that being the case, I've got to think that this wheat market is going to see some support in here. Now, with that being said, who knows what this weather is going to do? I'd sure like to see southwestern Kansas, western part of Kansas heal up and finally catch some moisture, but a lot of other areas finally have, and I think that's a big reason for the wheat sell-off over the last several weeks.
So you mentioned the positioning going into the reports on Friday. It's also into month and end of quarter, but just the reports themselves. What are you expecting for acreage? What do you think the market is expecting?
I'm a 91.35. That's what the ag market guys and I came up with. And then we are at 87.9 on beans. I mean, we feel like we're going to be pushing on the door 180, especially given profit margins this last year and the year before. You've got to think that you're going to plant quite a few acres as far as intentions are concerned. But I'll tell you, Michelle, this certainly looks to me like the type of spring where we could have prevent plant actually enter the fold once again. Bottom line is that we're awfully cold in the northern Midwest, northern plains. I mean, bottom line is here in Illinois, we're wet in most places. I mean, you had this huge system come through. A lot of your southern areas are not able to roll as early as what they wanted to. So this acreage report is going to be intentions. Once again, I have to remind you, and if you get any bullishness whatsoever out of intentions, in my opinion, it's setting yourself up for a pretty dynamic situation, because once again, I don't know that you get all the acres planted that they're going to forecast here on Friday.
Yeah. So is the big loser just cotton, or do we steal acres from anything else?
Yeah, I think a big loser is certainly going to be cotton as far as a percentage basis goes. You're probably going to, lose 20% plus as far as cotton's concerned. In the Delta, you're going to try to plant beans. Over into Texas, you're going to try to plant corn. A lot of corn's been planted in that part of the world already, but other areas, from what we're hearing, are actually too dry. So, unless you irrigate. But bottom line is, I think that's one of your biggest losers. I think one thing to keep a real close eye on is wheat abandonment. Especially in the areas that are driest. What's going to happen there? I mean, the thing is that I don't know that you plant anything there if you don't get some relief, though. So you can't really necessarily say you're going to switch over to something else unless you finally get Mother Nature to cooperate.
Yeah, that puts into question some of those double crop acres down there. And I'm with you. Abandonment, you got to see that at a part of that 3.8 million increase from last year. What about quarterly stocks? Are they going to confirm the strong cash basis levels we've continued to see for especially corn and beans in the country?
Yeah, I mean, to be honest with you, I don't even want to throw a quarterly stocks number at you. I loathe this report whenever it comes to quarterly stocks. We've seen so many curveballs thrown at us in the past. But what I'll say is, whenever I think about quarterly stocks, one thing I always look at is what have spreads been doing? What has the basis been doing? And for quite some time in here, we've seen bull spreading, both corn and beans. We've seen basis in corn. Most people all winter, and I went basically to every state that plants corn. Everyone told me the same thing. Man, this is the best basis I've ever had. When that's the case, it's hard for me to believe that you're going to come in here to a quarterly stocks number and come in well below what people are thinking, or come in well above, I guess, as far as stocks are concerned, what people are thinking. So I've got to think that there shouldn't be any bearish surprises out of stocks. But once again, I would never bet money on this report. It's handed people their lunch more often than not.
And livestock are to the plus side. And of course, we've had a lot of risk off and risk aversion in those markets. Funds have liquidated a lot of their length in the cattle. They're short in the hogs. Do you think that we can maybe start building on, this turn that we're seeing now in these two markets?
Yeah, I mean, I think so. Here's the thing, Michelle. I think you'd agree, but when you see livestock stronger on a day, whenever corn, beans, and wheat are all stronger, that's a pretty good sign. And so I do think it's kind of a risk-on day in here. As far as fats are concerned, I did expect that we would come in here and see some support. There's no doubt that you look over at the equities, and when they're trading a little bit higher, it makes people feel a little bit better that maybe some of that risk-off type mentality or consumer confidence type worry, if you will, would continue to rear its head. Now, you look at the hog market, and I mean, it's hard to figure out by all means. It's just been a tough one, an absolute bloodbath in the hog market. But you got to think you're going to find some support in here. I said earlier to you, I certainly wouldn't want to be a seller there. And then on the feeders, I think feeders is probably the most complicated. It's pretty tough to buy $200 plus feeders and pay $6 to $7 for corn and make these fats work out. But the cattle folks have gone out on faith most of their careers, and it sure appears they're going to have to do the same thing again here this year.
So it felt like real quick on the hogs, it felt like the pullback was a lot technical in nature, but you've got some saying that the numbers out in the country are well above where the hogs and pigs report has us pegged. Do you think that's going to get confirmed in the report Thursday?
I would say there's a decent likelihood there, and I think that's part of the weakness we've had here lately. The other thing is that we have to see really strong exports on a consistent basis, in my opinion, if we're going to shore up these hog prices.
All right, very good. Thanks for joining us, Matt Bennett with agmarket.net, and that's Markets Now.
Thank you.